as the jobs report comes out, the Canadian dollar really starts to take a hit, and that's a normal move, and this is likely to continue next week. Now, as we come back into our British pound currency futures, this one is selling off, but the correlation as of late is that the British pound futures have been moving somewhat in the opposite direction of the S&P 500. So this one here, we've got some support, or so excuse me, we have now resistance 163.13, 162.77, and 162.14 with a close of 162.05. So what we're doing next week is a reasonable play, is looking for places to buy US dollars. I'm not convinced that this is the best place to do that. So, and the currency futures basically are driven by the Forex market. Let's face it, you know, they're both over-the-counter products, currency futures, Forex, but the Forex is the driving factor as to what's going to happen with this British pound. My opinion for next week, it's not the best place to buy dollars. Euro FX futures, currency futures, again, are going to likely come under further pressure. I've talked about this for months, that essentially we have a series of lower highs and we're having lower lows. We're basing out. We've got a sell signal here again. At the beginning of last week, I made the recommendation selling Euro US in the 145.30 area. It looks like these losses are set to accelerate. Again, here is this pattern with this predicted MACD and this predicted true strength indicator both crossing that trigger. That's a very powerful sell signal is what that is. So in a particular case like this, we're only looking for a retracement higher to get into a short position. Now, the Aussie currency futures, I believe, will follow the same pattern and will suffer the same fate as the New Zealand, as the CAD, as the Euro. These are risk on, risk off currencies, and likely what's going to happen is they're going to sell off. Equities, if equities move aggressively lower, it will pull the Aussie dollar down with it, regardless of fundamentals with Australia. So as we look at the Aussie US currency pair, you can see that we're just trying to get over that zero line on that MACD, but it's already flattening out. Now, our predicted short-term difference is turning lower. Predicted medium and long-term differences are overbought. So the very minimum, we've closed at 106.54 on the currency future, or on the Forex pair, the Aussie US dollar. I would be looking for the 105.77 area to come under pressure very quickly early in the week, probably by Tuesday or Wednesday, if not sooner. So again, shorts highly recommended there. That is a very good place to buy dollars. Excuse me. The British pound, US dollar, again, this is not, in my opinion, the best place to sell the pound or to buy dollars in this particular case. We do have this triple EMA crosses completed. It is still a good short. I'd be watching the 163.20 area, but again, the pound has not actually been, the pound did make gains against the dollar on Friday, and it was the only currency that did it. And as the equities plummeted, the pound didn't. It kind of stabilized, where the euro, the CAD, they all got hit, but the pound kind of held its own. So be careful on this one, in my opinion. New Zealand, I believe, an excellent place to sell the New Zealand and buy US dollars. This is, we're getting a lower high here. We're already turning back down to the downside. Predicted short, medium, and long-term differences were overbought from last week. Another classic case, in my opinion, of buy the rumor, sell the fact. The risk-on currencies all strengthened against the dollar from pretty much Monday to Thursday, and then Friday, Thursday actually, things started to turn. And while the New Zealand US, a lot of analysts will say that the New Zealand US is in a very powerful uptrend. That may be, but at the bottom line is that if equities go lower, so does New Zealand. It's a risk-on, risk-off currency. That's what the New Zealand dollar is. The Canadian dollar falls into that exact same category. It's tried to push to the downside. It has. You can see that this triple EMA cross from Vantage Point could not complete, and subsequently now we're moving higher. We've closed at 98.53. This looks good for further longs. You can see support building now, 98.04, 98.14, 98.11. There's basically a wall of support sitting down there. There's your entry point for your long positions. We should be looking at the US CAD moving back over parity probably very, very soon. Depending how the market's going to react to this. Monday we have a North American holiday, so Tuesday, Wednesday is where we're going to see the real price. But again, if that dollar rallies, the U.S. CAD it's going lower. It's going higher, excuse me. So the U.S. Swiss franc, I'm going to spend very little time on this. My position is that this pair, much like Euro Swiss franc, should pretty much be avoided, because when you have intervention fears, you have Euro Swiss franc moving 200, 300, 400 pips a day. This is basically ridiculous, the moves we're seeing on this. And as you can see, against the dollar, it's still struggling. So, the dollar is still struggling to hold gains against the Swiss franc. So if there's a battle of a safe haven flows, I don't think it's unlikely the dollar is going to be the winner in that particular battle. So in that particular case, I stand aside. Dollar yen, you have a ton of support sitting down here. Nothing has changed. My own clients, we have been buying between 76 and 77 for probably what feels like the last 2 months. So it's been a very long time. It's nothing pretty, but continuing to buy at this. Stops should be set about 75.40, 75.50. If we get down to 75.50, we could go all the way down to 71. But obviously the Bank of Japan is watching that area, the 76 level, very, very closely. So for now, continue to play that. Euro US, again, I've talked extensively about this currency pair over the last few months, that we are not making higher highs. Your larger central banks and a lot of the big the big news articles and stuff are saying 150. They were saying 150 Euro US last week. Guys, we finished at 142 here. So usually when you hear these big articles and talking about 150, if a bank puts out a report suggesting that a currency is going to a certain level, you're better to go the other way, because chances are they're putting that information out there to try and get the market going in one direction so they can get a better price on shorts. So be cautious of this. What I've talked about extensively is there's nothing overly supportive of the Eurozone. The Euro currency and the US dollar currency is pretty much made up the same way. So and the Eurozone, let's face it, they've got some very, very serious problems, if not more serious than what's going on in the US and all the other countries around the world. So for now, the dollar index is slated to go higher. That means Euro US is going lower. And again, keeping things very simple. We don't want to complicate our trading. Dollar index up, Euro US down. That's it. So with that buy signal sitting on that DXY, we're probably looking at the 140 level on the Euro US. That's my view on that. Now, again, we're going to have, it's a holiday weekend, Labor Day in North America. The US and Canada markets are out, so we're going to have thin trading on Monday. And we're likely to have a very volatile start on Tuesday with that non-farm payroll number. But just remember, we have a clear bias to buy US dollars. So with that said, this is the Forex Weekly Outlook for the week of September the 5th, 2011. And my name is Greg Furman, market analyst here at TraderPlanet.com.